first one. So chapter 1 and chapter 2 is very theory based. It's gonna be a bit dry, okay, I understand, but we just have to get through it. Okay, so bear with me for chapter 1 and 2. Okay, so first up we have let me remove that. Okay, so first up we have business structures. So for those people taking O levels, you need to know all three. Those who are taking N levels, you just need to be familiar with the sole proprietorship. Okay, so for sole proprietorship, like the name suggests, right? Sole, it just means one person. Okay, so it's just a one-man show for sole proprietorship. So it's owned by one person, controlled by one person. So just one person will have complete control of the business. They make all the decision. So when it comes to sharing profit, you take all the profit, you also bear all the loss. So for any debts that you will have to be personally liable. Okay, then for sole proprietor, because one man show ma, so when the sole proprietor dies, the entire business will come to an end. Okay, so it does not go on. And then for sole proprietor, because again, you are one person, you are less likely to get financing, means you are less likely to get loans from banks. Okay, so that's for sole proprietor. Then moving on to partnership and private limited company. Partnership, you work with partners, so you have a group of you all working together. So based on the share that you all hold, it depends on how much control you all have. Okay, so you guys will make decision together with partners. And then because you guys are partners, most likely to get loans. And then if one partner die, the business will still go on forever. Okay, but for private limited company, it is a bit different from the other two. You are called shareholders. So you are not owners, you're not partners, you are called shareholders. Okay, so for shareholders, you do not control the business. You don't work there. You don't manage any of the business. You don't get to have a say with whatever decision that they make. Okay, so even if the shareholders die, okay, the company will go on forever. So this is called the going concern. You all know going concern, right? The theory. Okay, so that's called going concern. So as a company, you are a separate entity by itself. You are more likely to get loans. So banks, normally they will lend money to company. Okay, so for this one, right, people always ask like why shareholder and the relationship, they don't get it, right? So to illustrate, an example is in real life scenario. So you all know some Singapore company, SIA. You all know SIA, right? I don't know SIA. Can I have some response, please? You all know SIA, right? Okay. At least like knock your head or shake your head. Okay, so at least I know you all are with me. Okay, so for SIA or like Sheng Siong, this kind of company, they are company, right? So for me, just me as a person, I can be a SIA shareholder. So I can just go to the stock exchange and then I buy SIA share. So if I buy SIA share, then I'm a SIA shareholder. Okay, so if I'm a SIA shareholder, do I get to decide how they want to run in their management? Yeah, I don't. So for me, I'm just a shareholder. So I just buy their shares and that's it. Okay, I don't get any say to be part of their business unless I work over there. But I don't work over there. I just buy shares only. Okay, so if let's say tomorrow SIA just like die down and bankrupt, will I be liable to pay their debts? No, okay, because again, I'm just a shareholder. So if tomorrow they bankrupt, then nothing to do with me. So what I will lose is just the money I invest in them. That's all. Okay, so whatever debts, whatever liability they have, I'm not obliged to pay as a shareholder. Okay, so can everyone get that concept of shareholders? Yeah, okay, so it's different from owners, totally different. Okay, so let's say if I die off tomorrow, okay, touch wood, SIA will still go on forever. Okay, because I'm just a shareholder. So they will go on forever and ever, unlike a sole proprietorship. Okay, great. I don't know why it's a bit lagging. Okay, then for this one is what we talked about earlier also. So sole proprietorship, you take all profit, bear all loss. And then for private limited company, what you will get, you'll just be the share price appreciation or you'll just get dividends. So every year SIA will make money, right? So to reward me as a shareholder, they will give me a little bit of their profit as dividends. So what I will earn as a shareholder is dividends. Okay, then some other a bit dry things is for sole proprietorship is easier to set up, okay, easy to maintain. But for partnership and company, of course, it will be more complex, more regulation that you need to follow. Okay, so for again O-level people, you all need to know all three, all the characteristics you all need to know. So this one they will test you with SPQ. You need to be familiar. Okay, but for N-levels, please know about 2 or 3 of the characteristics of sole proprietorship. Okay, we all good on this. Okay, then next up we have stakeholders. Okay, so this one also pretty straightforward. So those are the people who have connection with your business. So these are the ones, and then people always will ask, right? Need to know all or not? No need, okay, but know at least like 2 to 3, that would be great. Okay, so for 2 to 3, you also need to know what they're interested in your business. Okay, so for me, I'm a very practical person lah. So you go for those that is easy to remember. So like government, like customer, all this easy to remember. Okay, so sometimes students they go and put like employee, then they say I don't know how to explain. Then don't put employee. Okay, so put those that you know how to explain one. Okay, so personally, I will go with government and customer. I think it's the most straightforward. So government, they want to collect tax. Then customer, they want to see whether your service is good, your product is good, whether they want to buy from you. That's about it. Okay, so any question from here at this point? No? Okay, then let's move on. Okay, then next one we have ethics. Okay, so for those who are considering to go into this field in a serious manner, okay, like me, ethics is a very big thing. Okay, so if you go and take your professional certs, right, not degree, professional certs, they will have like one module just about ethics one. So the entire paper just about ethics one. Okay, so just sharing only. Okay, so for us over here, we are just like, baby class, right? They introduce two. Okay, so there's integrity, objectivity. What's the keyword? Integrity, honest, and straightforward. Then objectivity, you want to be unbiased, and then you have no conflict of interest. Okay, so this one must remember, also classic question that they will test all the time. All right, and then we have role of accountants. Are these the only two? No, but again, they just introduce two. Okay, so if they ask you to state, right, you just have to say stewardship decision making. If they ask you to state and explain, then you will need to write a little bit more lengthy. Okay, so for role of accountant, just remember stewardship decision making. Okay, so stewardship means you are helping the management to pull out all the numbers, you prepare all the FS, all the cash flows, you do out all the journal entry, all the ledger. This is stewardship. Okay, then decision making based on all the numbers you have, what do you do with it? So just the numbers alone is like no meaning one. You need to do something, you need to analyze the numbers to make something out of it. So do you open up a new branch? Do you like cut off people, or do you hire more people? Or you want to come up with a new revenue stream to produce more product, so on and so forth. So these are decision making. Okay. Yeah, so a bit dry, I know. Okay, but we have to push on. Okay, then next one we are accounting theories. So this one, if you ask me, need to know all or not, is you need to know all. Okay, you have to know all. But along the way, the next 2 years, you will keep writing and then you will know. So you need to know what is the relevant theory to apply in whatever relevant concepts. Okay, so for this one, I'm just gonna quickly go through. Okay, so for the first one, accounting entity, which is what I talked about earlier. Your business and the owner are separate entity. Okay, so for instance, like you as a business owner, right, next time you're gonna be an entrepreneur. If you drive a Ferrari, okay, then if your Ferrari, you go and pump petrol for your own Ferrari, right, that petrol, can you call it a business expense? Then the one is called what? Start with D. This is your personal car, right? So what is it called? Drawings. Yeah. Okay. So yeah, separate entity. So you cannot put that under your business expense, like transport accounting cannot, because that one is your personal thing already. So you cannot tie it with the business. So that's what this is talking about. Then secondly, accounting period, I think is pretty self-explanatory already. So your business is divided into equal interval, 12 months, 12 months, 12 months. Okay, then third one, accrual basis. This one you'll use it in chapter 6 and 7. We will talk about this in detail later. Okay, so this one is basically means that doesn't matter when your money is received, when you have performed your obligation, when you have delivered your goods and service, you will recognize your income. Same for expense. So when you incur the expense, when you use the expense, you will record it. You will recognize it, not when you pay the expense. Okay. Then fourth one, consistency. This one means you need to use the same accounting method, but we are not going to talk about this today. And next one, we have historical costs. So historical cost means whatever transaction we record, it must be at the original price. So for example of this is when, as a business, right, let's say we buy a building, okay, for 50 million. Okay, and then like next 10 years, if the price will appreciate, right? Maybe it becomes 70 million. But in our books, do we still record at 50 or 70? Or already say original, right? So 50 or 70? 50, yeah. Okay, so we have to always record it at the original cost. Okay, then matching is the same. So matching, this one basically is explaining the profit formula. So income minus expense, that gives me profit. Okay, whatever income we earn must match with our expense income to find profit. Okay, then after that we have materiality. This one also not going to talk much about it today. Second last, monetary. So whatever that can be measured in money terms are recorded. So for instance, like good location, good employee, you have a customer base. All these you cannot be measured in money terms, so we don't record. Okay, then lastly, objectivity. This one will be used for your source doc. So you all can write there below this for source doc. So if they ask you like source, why we need to use source doc and all that kind, explain with a relevant theory why source doc is required, then that will be your answer. Okay, so you all can put under there the objectivity, this for source doc. So anything source doc related, it will be this theory. You all want to like write down? Yeah. Okay. Oh, we have 3 more. Oops. Okay, so prudence, this one similarly you can use for these 3 chapter. Okay, so for here we don't want to overstate asset profit, we don't want to understate liability and losses. Okay, so quite self-explanatory. Then revenue recognition, same thing that I mentioned, you will recognize the income when you perform your obligation, when you deliver the goods and service, not when you receive the cash. Then going concern, which is what I was saying earlier. Okay, we will assume that they will go on forever and ever and ever. Okay, so in like business term, people will say going concern risk. So going concern risk, right, means that we are expecting the business to close down very soon already. That's going concern risk, like they cannot go on. Okay, so this is just some of the terms that we use. Okay, finally, chapter 2. Okay, so chapter 2 also a bit dry, but okay, bear with me, okay? Okay, so chapter 2, we have to learn about the types of business. So again, this is, I think, self-explanatory. Okay, so trading, you buy and sell goods. Service, you provide service. Okay, so one practical question, like this one, OVERMUGGED. What type of business is OVERMUGGED? Service business lah. Okay, because you know they don't sell goods, right? So service business. Okay, and then types of transaction also very basic. Okay, cash means you pay immediately. So not say like literal cash, so you can use your card to pay also can. So cash just means you pay immediately. But credit means you pay at a future date, that's credit. Okay, and then let's look at this. This one, student tends to get confused and they tend to mix it up together. They are not the same, okay? So for on the left-hand side, we have the accounting information system. So that you will have 5 steps. Then accounting cycle, you have 4 steps. Okay, so for here, I have this little acronym here to help my students. Okay, let me see if I can get my pointer out. Okay, so I have this little acronym to help my students to remember better. Okay, so for accounting information system, I will use this. She just left the fanfare. So the SJLTF. But if you don't like this acronym, you can go and create something of your own. And the whole point is you can remember it, then that's fine lah. Okay, so you follow SJLTF. Source doc, journal, ledger, TB, and then your FS. Okay, then for the accounting cycle, remember there is 4 stages, so they are not the same. Okay, so for accounting cycle, I use this one. I'm really cold. So IARC. Yeah. Okay, so don't get confused by the two. They are separate. They are different things. Okay. Okay, then let's move on. Okay, so this is source doc. Okay, so source doc, this one, this is the official definition, like textbook answer. Okay, so again, my personality is I'm very practical, I'm very straightforward, I'm efficient. So this one, if I read, I'll want to fall asleep. So for me, I summarize everything. So this is the very, very, very summarized version, which I share with my students. Okay, so these are the keywords to look out for when you identify your source doc. So you see anything that say buy, sell, credit is invoice. They say undercharge, debit note. Anything returning of goods, doesn't matter who, credit note. Pay money, payment voucher, receive money, receipt. Okay, so this can be also, they say issue check. So issue check means what? What is issue check? Pay money lah. Okay, so issue check, you will know pay money, then payment voucher. Okay, collect money, then receipt. Then for this kind related to bank, so I'm talking about like interest, bank charges, dishonor check, that kind of thing. Then you put bank statement. But if they say anything about issue check, pay check, please don't put bank statement. You have to put these two. So that's just a requirement from Cambridge. Yeah. Okay. Then anything you want to inform people that you have paid, that will be a remittance advice. Okay, so I will pause this here for a minute. Hi. Morning. Do you have a revision kit? Yeah. Okay. It's free sitting. Make yourself comfortable. Okay, then let's move on. 3, so here there will be a little bit of calculation. So it's the very basic accounting 101. So very, very basic one. Okay, so for here to even know the formula, you need to know some of the elements first. Okay, so these are the very basic terms that you should know how to recognize. Okay, so for asset, so these are things that will help you generate future benefits. So future benefit means like your cash inflow and how it will enhance your business structure. So your asset. So can someone give me some examples of assets? Whatever assets also can. Any assets? Okay, inventory, any more? Okay, cash at bank. Okay, what about some non-current assets? Well, all avoiding eye contact with me. What's other asset, non-current assets? Huh? Cannot put car lah in the FS. Okay, motor vehicle, yeah, okay. Visual fitting, machinery, all these are all assets, no? Okay, then liability, these are things that you owe people. This is basically debts lah. Okay, so layman terms, they will call it debts. Okay, so these are things that you owe to people, liability. Okay, then equity, this will basically be your A minus your L, is your equity. So equity is just money that you raise from your shareholders. So from my earlier example, I say like me, Bonnie, go and buy SIA shares, right? So the money that I spend to buy the SIA share, that money will be called equity to them. So those are money you raise from your shareholders, your investors, these are equity. Okay? Then after that, here, income expense, I think also self-explanatory and straightforward, right? Okay, so income is just money you earn from your activities, your cash inflow. Okay, then expense are money that you spend. Okay, the money that you spend to help you earn money, that's your expense. Okay, then your income minus your expense, that gives you profit. Can? Okay, so this one very basic things. I believe you all should be familiar by now. Okay, then in the FS, you all got learn 2 types. So first one, you have performance statement. So your performance, that will help you determine your profit. So again, to find profit, income minus expense. So this formula we will keep repeating and repeating. You will need to know this one as well. Okay, income minus expense is profit. But if your expense is more than your income, then what's that called? There is a loss. Okay, you are making loss. You spend more money than you earn. Okay, then the second, okay, then all the items here, it will be close to your income summary. So everything will close to 0 and then close to income summary. Okay, so on the other hand, you have your position statement is your ALE. All these you will have a balance brought down one. So your income expense, you will never see any balance. You will always be 0 at the year end. Okay, then in the position statement, your teachers will always say you got to balance, right? So you are balancing this, no? Your A, you balance with L and E. So this is what you are balancing, the formula. Can? Are we all good on this? Yeah, so I think in the revision kit, I've included the template of how the FS look like. So you all can go there and have a look. Okay, then for here, let's go through the equation. So for sole proprietorship, this is the most basic one. Your A equals to your L plus E. So under sole proprietor, your E here is very straightforward. It will be your capital plus profit minus drawing. So that's your E. Okay. So capital is whatever money that you pump in, that's called capital. So owner pump into the business, that is a capital. Then whatever owner withdraw for personal use, that's a drawing. So that will be referring to my example earlier, okay? The one where I pump petrol in my Ferrari. So that's nothing to do with business, drawings, okay? Then for profit, again, income minus expense. So this is for sole proprietorship. Okay, then for a company, it will be this. So this one, N-level people, you all will be excluded for this one. Okay, so for equity, the formula will be a bit different already. So it will be your RE plus profit minus dividend. Okay, so there's no more capital, no more drawing. It will be RE and dividend. And then you have another portion here, which is your share cap. So this one, don't worry too much. You all will learn next year. Okay, so for company, basically your equity will look like that. Then again, profit, income minus expense. Okay, you all seem very bored, I understand. It's a bit dry. Okay, then let's move on with double entry. So for double entry, personally, I use Alice. Okay, Chell. So I use Alice. Regardless whatever acronym you use, if you don't want to use Alice also can, but end of the day, your acronym that you use, is still the same one. Okay, you have asset, more asset, you debit. Okay, then you have liability income, you have more liability income, you credit. So end of the day, it's still the same one, whichever acronym that you choose to use, that you prefer. You all get what I mean, right? Yeah. Okay. So end of the day, your double entry rule will be your DR always equals to your CR because it's double entry. Everything will equal one. Can? Okay, so just curious, anyone actually uses Alice or you use some other things, other acronym? Alice. So, other one. Okay, whatever it is lah. Okay, so my whole point is still the same thing lah. Okay, you just need to know your asset increase, you got debit it. Okay, then your income, all this will be credit in nature. Okay, capital also credit in nature. All right. Then let's look at some examples. Okay, so very simple one, right? So your inventory, you know, is an asset. So you buy inventory, the asset will be increased, ma? Then you debit. Okay, then you use check. So you see anything check will be cash at bank already. So here I buy inventory with check. So my bank will become lesser. So bank is an asset, become lesser credit. So the double entry will be like that. Okay, so this one very basic, very simple. Okay, then if they say if it's on credit, then trade payable. So I sell on credit means I will owe more money. Because I owe money, right? So my liability increase credit. Okay? Okay. Then here, I want to highlight this to everyone. So this is selling goods. So when you sell goods, you will always have two journal entries. So this one students always get wrong. I don't know why also. You will always be two. Okay, so one will to account for the selling, one to account for the cost price. So basically here, you buy the goods at 3K, you sell it at 4K. Basically, that's what it means. Okay, so end of the day, from here, you can tell already, right? How much did they earn? How much the profit? It's simple math, man. What's the profit? 1,000. Okay, so here, can you see your income 4,000, then your expense here 3K. So end of the day, your gross profit here is 1,000. Okay, so remember your sell goods always is 2. Okay, so over here, what if I don't put it on credit? What if I sell on cash? How will this change? How will the journal entry change? Then this one, you change it to cash at bank. Okay, so remember, this one will always be 2 journal entry. Then what's the opposite of sell goods? Don't tell me buy goods. What's the opposite of sell? So I sell to them, what's the opposite? Don't tell me buy, I already say already. So what's the opposite of sell? The opposite direction. Return lah. Okay, so again, you return is the opposite, right? So similarly, you also have 2 journal entry. Okay, so you realize it's the same, you just flip it around. Because it's the reverse, you just flip, no? So take note, it won't be a revenue, it will be a sales return. Okay, and then everything you just flip. So all this is also make sense, one. They return to you, they owe you lesser money. So asset decrease. And then they return goods to you, you have more inventory, asset increase. Okay, so all this makes sense. So remember, you sell got 2 entry, the person return back to you also will be 2 entries, one. Okay, all good. Okay, then here for expense, this one also people cannot get it, so I just put in this slide here. So here I say I pay check for expense, debit expense, credit bank. Okay, so this one I think is self-explanatory because I pay money, I got lesser money in the bank, so bank decrease, so credit. Okay, but for here, people will always like ask, this one also a very beginner question that student will ask one. Why I pay for expense increase? Why not decrease? Okay, so this one another beginner question. So when you pay expense, means you incur more expense, you use more expense. So you should debit expense. So you keep paying, you have more expense, you debit expense. So like in Singapore, right? We are all living in Singapore, right? Okay, so in Singapore, you know, people will hear people say that all the time, right? Like, wow, the expense is so high. Singapore expense is very high, right? So why people say Singapore expense is high? Because you keep spending money. That's why the expense is high. Okay, because I keep spending. The money keeps flowing out. So the expense is high. Okay, so let's get this concept right. So the more you use it, the more you spend, that will be more expense. So debit expense. Okay? If your expense is low, means you never spend money lah, then low expense. All can understand, right? Yep. Okay. Then let's look at the ledger account. So if you can understand journal entries, you can do ledger accounts. Okay, so ledger account is the same thing as journal entry. So your journal entry, that one is the number one thing you need to get it right. Okay, so for ledger account, just some very simple things to highlight, which is your debit credits here, it is belonging to your cash at bank. Okay, so this one also another common mistake. There are people who are gonna take O level in like 3 weeks time, right? They can still make this mistake. I also don't know how. Okay, so like here, this 500 is sitting on credit, right? So this 500 is credit to cash at bank. So this is a 500 credit cash at bank. And then same for here, this is a 3,000 for DR to cash at bank. Okay, it's not to the particulars here. So please take note that your debit credit is back to your title. Okay. Actually, I make some typo mistakes here. Can anyone point it out? Oh, suddenly so quiet. Yeah, there's a typo mistake. I realized it in my first lesson. Then I was like, oh, there's typo mistake. Then I asked people to change. But since this one is the third session already, right? Come, let's test your skills. Can you spot the mistakes? There's actually a mistake here. Okay, I give you all a hint. Here. Here got something wrong. Yeah. So this one should be what? Yes. Okay, so the balance is wrong. Please change in your papers. Yeah. Okay, good job on that. Yeah, so my balance I calculated wrong. So for here, it will be the 45,000 minus 500 because my credit is a minus here. Okay. Then what about this one? Is this also accurate? Wrong, right? So it will be the 44,500 plus 3,004. Then I get my balance. Okay, so please change that. So for the ledger, it really depends on the nature of the account that you're doing. So for cash at bank, right, debit is plus. So here, this column is plus. But if I'm doing an income liability, then it will be the other way around. The plus will be the credit. So take note of that. So all these basic things you all need to know. So what I always tell my students is you need to know all your basic things. You need to recognize the element. You need to know what is plus minus. You need to know how to do journal entry. So if these three simple things you all cannot do right, then there's no point moving on to the syllabus already. So for students who come to me, right, I always ask them to fix these three things first, then we move forward. If these three things you cannot do right, then really the behind chapters you cannot do one. Yeah, okay, so this is really very important. I just want to like highlight that. Can? Okay, then for here, this is basically what I explained lah. Okay. Then here also have some errors. You're going to change. You all spot the errors. So here should be I receive check, then cash at bank go up. So the arrow should be point up, not point down. The typo in my, yeah. Okay. So the same thing lah. Okay, so I pay money, I will have lesser cash at bank, so minus. I receive check, I have more money in the bank. So here become debit, I plus to the cash at bank. Can? Okay, so any questions for this before we move forward? No questions. Okay, I see people yawning already. I mean, I understand, a bit boring, I understand. But the first chapter is like that one. It's like that one. Okay, and then here, which is what I said, you will always bring down balance for ALE. Okay, but if it's an income expense, then all will become a zero, and then you throw it to your income summary. Okay? Okay, so for trade, this one I will just quickly run through because we are on the topic of the journal entry. So I just want to quickly go through. So just a show of hands who have actually touched on discount already in school. Yeah, just a show of hand, don't need to be shy one. Have, then just raise hand. Haven't yet? Don't have. Okay, so I think quite majority of y'all have already studied this. So I will just quickly go through because this is very closely tied to your journal entries. Okay, so I will go through this quickly. Okay, so for discount, some of the basic things you need to learn is you need to know trade and cash. Okay, so those who haven't learned, you all can listen first because I mean, end of the day, you all still got to learn that. Okay, so it's better you all listen first. You all go to school, you all are more familiar. Okay, so for here, trade means you give trade discount, you want people to buy in bulk, means buy in large quantity. No, this one is not inside. This one is not inside. I excluded it. Okay, then for cash, you want to give people to what? Encourage prompt payment. Okay, so for trade discount, this one you will only give it or receive it when you buy sell. At the point when you buy sell. But then for cash, you will only give the discount or get the discount when you pay money. Which makes sense because you pay early, you want to encourage pay early ma. So you pay early, you get a discount. Okay, so for cash discount, it will be recorded. Trade, you will not record, you will straight away deduct it off. So for cash discount, this is how the journal entry looks like. So this is why I want to go through because it's touching on journal entry. So for this discount allowed, this one is a what? Expense. Okay, I give discount means I collect lesser money ma. So expense. Okay, then for here, discount received, this is a income. Excellent. So income means I earn money. I spend lesser money, so I earn. Okay, so again, this one back to the basic, this is an expense, so it will sit at the debit side. This is a income, so it sit at the credit side. Okay, so for the journal entry, long story short, is like that lah. Okay, but some students, they prefer to split it up. So in details, it will be like this. Okay, so for here, basically what it means is customer owe me 4,500. But out of the 4,500, they only pay 4,000. So the remaining 500, it will be under the discount allowed. So end of the day, this customer don't owe me anything. I fully write off the 4,500. Okay, can you all see? So the receivable, I will credit fully 4,500. Okay, so the same will apply for if I'm buying. So the idea is the same. I will owe people 4,500. But then people give me discount, right? Then I'm not gonna pay the full thing. So they give me discount, I will only pay them 4,000. So the remaining 500, this one will throw under the discount receipt. Like that. Okay? Yeah, so the logic is the same. So this one is the same thing. So up to you, you want to like combine it or separate it, it's the same thing. Okay, so do you all want to take this down? If not, I will move on. Okay, I will pause for a while. Plotting the credit. Oh, I think, yeah, Jensen, I think you're talking about the error. Okay. Okay, so for ledger account, just now we go through on how to prepare ledger account, right? So not all the time the question they will ask you to prepare ledger account. So sometimes it can be a reverse engineer. So they can give you the ledger account, but then you need to know how to interpret what it means lah. Okay, so for this one, when you go out to work all this, you also need to know how to read. Okay, so for this kind, the long story short, you need to find out what's the double entry here. So for me, the quick tip is you find what's the double entry. So for instance, like 4th August here, what's the double entry? Debit debit inventory, credit payable, right? So from there, you ask yourself, debit inventory, what does it mean? More inventory. Okay, then credit payable means you owe more money. So you combine together means what? I buy inventory. So this one also, you need some time to get used to this, to practice also. Okay, so again, for today, we can't go through all types of questions. So in one chapter, they can have many ways to test your. So again, this is a 3-hour class. We can't go through everything. Okay, so we'll go through some from each chapter. So in regular class, this is where we will dive into more detail. So in the every 2 hours, we will go through in details per chapter. So I just want to manage the expectation. Okay, so you want to go in details, that will be the regular class. That's what we will do long. Okay, so we will really go into details for each chapter. So this is what I want to point out. Okay, so they can test you to prepare the ledger account or you interpret it. Okay, then critic is just ask yourself what's the journal entry, think about it. Debit, what does that mean? Credit, what does that mean? Combine it together. Okay, any questions? Yeah, questions? No? Okay, then I think it's about 45 minutes of talking already, right? Yeah, so I should be the tired one, not you're just sitting there listening. Okay, so it's been 45 minutes. Okay, you all look a bit tired. So shall we take a 10 minutes break? Is that enough? Okay, let's take 10 minutes break and we will be back. You want to use the washroom, is it? Oh, okay. So the washroom is over there in case you all need it. That corner over there. The snacks you all can go and help yourself. It's free flow. Okay, don't be shy. Just go and take it. Oh, you can smile if you want. Okay, I don't take already. I don't want to make you all feel uncomfortable. You look very quiet. The other two class is very noisy. Really very noisy. I have to ask them to like tone down actually. Okay, so it's been 10 minutes. Shall we get back? Yeah, so those online, can you all do me a favor to please mute your mic? Please check your side. Mute your mic. Am I very echoey? Can we do a mic check? Can you all hear me? So please type in the chat box. Can you all hear me? Those online, can you all hear me? Or am I like, is it echoey or what? A bit echoey. Okay, 1 second. Okay, what about now? Is it better now? Okay. Okay, so okay here. Then we will review back to Xander, can you off your mic, please? Thank you. If not, it's gonna be a bit disruptive. Okay, great. Okay, so let's move on from our break. So is everyone feeling energized after the break? Yes. Great. Okay, so not so late already, yeah? Yeah. Okay, so I understand what you feel. Okay, so like I mentioned, I'm also a uni student. So Monday to Friday, I'm also the one sitting there listening to the professors. So I play both roles. So I know how the professor feel. I also know how you all feel. Okay, I understand it's not easy, but let's push on now, shall we? Okay, so let's move on to chapter 6 and 7. So this is where the fun begins. For me, personally, this is my favorite. In the beginning, when you first start to learn, can be a little bit confusing, but after you get the hang of it, it's really, really simple. So again, just a quick check. Who has studied this already? Okay, the rest learn already. The two friends in front, you all learn already? You all learn already? Or haven't yet? Okay, so again, doesn't matter. So end of the day, all the chapters you all need to know. Okay, so if you haven't learned, you all can just listen first. It will help you when you all learn this in school eventually. So when we first of all, you need to know the terms. Okay, so again, the basic terminologies. So for expense, like we mentioned, that one is money that we spend, we flow out, right? So for expense, we can choose to pay early or pay late. Am I right? Okay, so if I pay early, that will be called a prepayment. If I pay late, that will be a payable. So does this word look familiar right here? Yeah, trade payable, expense payable. So the meaning is the same lah. Okay, I'm going to pay, but then I've not yet paid. That's payable. Okay, so again, every payable is a liability one. Okay, then on the contrary, for income, it will be the complete mirror opposite. So for income, also people pay me money, right? So they can also choose to pay me late, pay me early, what? Right? So if they pay me late, that will be a receivable. I'm going to receive, but haven't received. So same as your trade receivable. Okay, then if they pay me early, it will be a receipt in advance. Okay, so any idea why people pay me early? This one is an L. Why is it a liability? Any idea? Well, I ask questions, suddenly so quiet. Any idea? Okay, so for this one, people pay me early means, right, I've collected people's money, right? I took their cash already. But have I performed my obligation yet? Have I, so I haven't performed my service. I haven't delivered the goods. I never deliver the service yet. So in a way, I'm owing them, right? I take their money first, but I haven't performed any obligation. So it's an L. Okay? So take note for here, how the journal entry will be is you need to know whether it's prepaid, payable, received in advance, receivable, and then you put them at their plus side. So for prepaid, you know that it's an asset. So asset is a debit in nature. So prepaid, you will throw at the debit side. So same for payable. So payable is an L, received in advance is an L. So all these L, I'll put them at the plus side, the credit side. Okay? So any issues with the journal entry? So this is the basic one. You need to familiar with the terms first. Anything to clarify? Yeah. Anything to ask? No? Okay, then we will move on. So these are more like more in detail. So when they ask you to interpret, this will be the way to do it. Okay. So for expense, the word you use is incurred and you pay. So it's whatever I go in red. Okay, then I have a timeline here to help you all better understand. So for incurred means for prepaid expense means I pay in advance right? So in exam, please don't write prepaid expense means I pay early. Marks will be deducted. Okay, so don't write that. Students always have to write that. I also don't know why. Okay, so it's not, you cannot say pay early. So you pay early is you pay 1 day early or 1 month early. Don't know. Okay, so for accounting, always in 12-month period. So for prepayment means I pay early, but I use later. So I incur next year, but then I pay current year. So all this will always be this year and next year. This year and next year. Okay, so please don't put anything like I pay early or I pay late or that kind of thing. Okay, this year, next year. So prepaid, I pay now, but then I only incur it next year. Okay, so this timeline will help you all understand incur means the X So incur, the X means when I use the expense. Okay, then this money sign just means when I pay. So I pay now, but then I use it next year. So for payable, it will be the complete mirror opposite as well. Payable. Okay, so means I pay late in a way Okay, so pay late means I incur this year. Can you see the X is here? I use it now, but then I will only pay the expense next year. Okay. So any issues with this? Yeah. Okay, so again, expense is you pay expense, you incur expense, then again, always this year and next year. Then for income will be the same idea as well. So for income, you will be earning income and you receive money. Okay, so don't say pay income. So people will laugh, say, hey, why do this kind of stupid mistake? But then I tell you, when you are the one doing, you all will write kind of funny things one. Okay, so you don't pay an income, right? Don't make sense. Okay, so you earn income and you receive income. So same idea this year, next year. So receive in advance means I receive right now, today, but then I will only earn it next year. So what does earn income means? When I perform my obligation, when I deliver my goods, my service, that's when I earn it. Okay? When I collect money, that's not when I earn. Collect money has nothing to do with earning income. Okay, sorry. Because this room very echoey, so if you talk, it's gonna, the sound will spread. Okay, so can you all minimize a bit? Yeah, thank you. Okay, then for receivable is the same thing, mirror image. Okay, so I already earn my income current year. So current year, I deliver good service, perform obligation, but then next year, then people pay me the cash. So receivable. Gonna receive, but haven't yet received. So again, remember, it's always current year and next year. Okay, then income will always be receive cash and you earn income. So is everyone clear with how this works? How the prepayment and the deferred payment works? Okay, all clear? Okay, then let's move with answering some questions. So when we answer a question, there will be these 4 steps that we follow. Okay, so your teacher introduced you all the 4 steps. Those who have studied already. 4 steps. You all say you all learned already, right? Never use 4 steps. But learn? No? No? Yes. Okay, some yes, some no's. Okay, regardless. let's look at the 4 steps. So this is where we will actually start to earn some points and answer questions. So for anything to do with expense and income, you will follow these 4 steps. Okay, so step 1, you have reverse, payment, and then adjust, and then income summary. So this is what I talked about earlier. All your income expense, you will close to 0 to the income summary. Okay, so let's look at this in detail. So for your step 1, you will reverse. So what exactly are you reversing? You are reversing this. Okay, you are reversing this. So all this journal entry, you will swap it, you reverse. Okay, and then payment. So some teacher call this cash at bank. So you will pay with cash at bank. So for here, the journal entry will be the same thing, the accounting 101 that you all learned. Income, I receive money, debit cash at bank. Then expense, I pay money. So credit cash at bank. Okay? Then here you will adjust in the year end. And then after that, you will sum it up, everything you will close to 0. So income close to 0, debit. Expense close to 0, credit. So close to 0, I will put them at the minus side. So you can see income at the minus side, expense at the minus side. So this one, don't worry too much. Later we will apply it into the mock paper. Okay, that one we will go through together when we are doing the mock paper. Okay, so step 1 will always be first day of the year. 3, 4 will always be on the last day. Okay. Okay, then for here, income expense, some theories again, they will ask you what's the relevant accounting theory, matching, accrual basis. So need to remember. Okay, so I'm gonna pause here for now. You all have any questions or any queries? Any queries? Any concerns? Well, every time I look at y'all, the eye will, y'all avoid my eye contact. In school also like that. Anything to ask? Okay, then if not, I just want to highlight this table below here. Okay, so like I mentioned, your expense and your income, they are the complete mirror opposite of each other one. So you can see that down here, my income that is owing is an asset. But when it comes to expense that is owing, it becomes an L. You see it's opposite. So similarly for prepayments, income that people pay me early is a liability. But for expense paid early, that is an asset. Okay, so can you see it's opposite? One pay early, so both pay early, one is L, one is A. Then here, pay late, one is L, one is A. You'll see the difference that I'm talking about. Yeah. Okay, so I'm gonna pause here for maybe 1 second for you all to digest this because I see you all writing down. So we pause here for a while to digest. Okay. So this is the question that we are gonna do in the mock paper. So I'm gonna like skip this first. Let me skip that. And then let's jump to this one. So this one, I didn't include it in the revision kit because the things we learn is very like application one. So like just reading is not enough. So later in the mock paper, we will actually get our hands busy so you actually understand better. Okay, so for cash, some of the new terms that is introduced is a dishonored check. So anyone know what does that mean? Dishonored check. Sorry. Dishonored check. It's what? Say louder lah. Cannot hear. What's dishonored check?
Check is closed stated. Information on the check is not covered.
Or those in online, you all can type in the chat box. Sorry, I don't have your audio on, so you have to type in the chat so I can see what you are saying. So what's dishonored check? The idea? Okay, invalid. That's not wrong. Okay, invalid check. Okay, check they are rejected by the bank. Right, rejected by the bank. It's being bounced back. Yeah. Okay, expired check is one of the reasons, but yeah. Okay, so for here, dishonored share, these are the several reasons why it's being rejected, it's being bounced back. Okay, so it's expired, post-dated, and all those. Okay, or the person sending money got no money in the bank. So again, need to know all. No need lah. Okay, so know about two, that's good enough already. But you very honest, you want to remember all, also nobody is stopping you. Okay, so these are the reasons that you need to remember. Okay, so they will ask this one for bank rec kind of question or paper one. Okay, then next one we have internal controls. Oh, so I've been doing this all week. Okay, so internal controls, you all know what's that? Internal controls. Okay, so internal control, these are just systems that you guys set up to prevent fraud, to detect and to prevent fraud. Okay, so for example, in your house, you all also have internal controls, right? So in your own house, you all have a lock for your gate, right? Correct? Your gate, you all have a lock. So why do you all have the lock? What's the reason for putting a lock on your gate? Yeah, people can come in, right? So same thing, that's an internal control. So you want to prevent people from coming in to steal your money or whatever. Same for your phone. So like your phone, you all have a password, right? So that itself is also an internal control. So you set up a password, not everybody can enter to your phone. Okay? So same thing for businesses, we will set up this kind of systems to detect fraud, to prevent fraud. Okay, so these are called internal control, the term. So what are the purpose? The first one is whatever I just explained. You want to safeguard your asset. Okay, so people don't anyhow steal your cash, steal your asset. And then second, you want to comply with regulation. So for company, remember I say they got regulations, right? So some of the regulations, they will include internal controls that you need to set up. And lastly, you want to ensure your transactions are recorded accurately. And so these are the purposes. And then internal controls, these four are introduced to you. So are there more internal controls? Yes, there are a lot more, but here in the syllabus, they teach you all four. Okay, so for this one, people will ask again, do I need to know all four? Need to know all four? No. Need. Okay, so for sadly, this one we need to know all four. Okay, so let's quickly run through. Okay, sorry. Can you all minimize a bit because very echoey. So you all talk the whole, yeah. Okay, thank you for your understanding. Okay, so for the first one, we have segregation of duty. So segregation of duty means different people do different jobs. So for instance, if I'm the one handling the cash going out, I cannot be the one handling the cash coming in. Okay, so must be separate. Another example is if I'm the one recording, right? I do the double entry, the journal. I cannot be the one handling the cash. So I cannot sign check, I cannot collect check. So if I'm the one signing check, collecting check, I handle all the money, right? Then I cannot be the one recording. So our duty must separate. Okay, if not, it's easy for us to steal the money. Also, that's segregation of duty. Then second one, custody of cash. So custody of cash, I think also quite self-explanatory. So who have worked part-time before? In those like F&B, anyone? Yeah, so you know all those F&B store, you all have cash sales, right? So every night when you all do closing, they will cash it back to the bank. So that's an example of custody of cash. Okay, or the cash you go and keep it into a safe. So you want to make sure people cannot reach your cash, people cannot touch it. It's secure. Okay, then authorization, also another self-explanatory one. Only authorized person have the right to approve your check. So for real life, what they do is maybe like if you're signing checks, right, the manager can only sign up to 20,000. Then maybe the director can sign up to 30,000. Then CFO, they can sign up to 50,000. So not everybody can anyhow sign check. Okay, so you need proper authorization. Then last one will be bank rec, which is what we will do. So you want to see the difference between your cash and bank ledger and your bank statement. Okay, so this one more time, we need to know all four. So some question, it depends how they ask. So some question, they will just say very simple one. Can you provide me 2 internal control? Then you can just put any random 2. But sometimes if the question they ask you to say, can you state the internal control that says that we must secure cash? And then you need to know. So that one means it's a custody of cash. Okay? Or some question they will ask, they are already they already have this practice of managers approving the payments. Can you name me 2 other internal controls to secure cash? So you need to know that approved payment will be this one. So if you still put authorization, it's wrong. So you need to put either one of these 3. You all get what I'm saying? Yeah. Okay, so you need to know all 4, and at the same time, you also need to know what the internal control, what they do also roughly. Don't need to know word for word, but you need to have at least some sort of general idea what it means and what they do. Like. Okay, you all with me? Okay, then let's move with the bank rec. So these are the steps. Again, it's a lot of words. I also don't like to read words, very wordy. So again, this one we will do some application with the mock paper later. Yes. Okay, so any question for this cash, for internal controls, for bank rec? No? Okay, then let's move on with inventory. So inventory is something new that I just add in last minute. Okay, so it's not in the revision kit. So if you all want, you all can like take down the notes if you feel like it. Okay, so firstly, again, some theory things that we need to go through. So inventory, those are just things that goods that we buy for us to sell, earn money. So for these labels, we are learning this system called FIFO. So what does FIFO means? First in, first out. Okay, so also again self-explanatory lah. Okay, whatever you buy first, you sell first. First in, first out. Okay, then another term that you all learn will be this one, right? This new term, NRV. Okay, so NRV, these are basically what the goods hold at the market value. Okay, so as of now, how much we can resell it for the current market value of the NRV. Okay, so this one is the official definition lah. Okay, but the market value, that one is more easier to understand. Hey, so you all learned already, right? Inventory. Who haven't learned yet this chapter? Haven't learned yet? Anyone haven't learned yet? So only those 2. All learned already, right? Okay. So for yeah. So here you all will have this new term introduced to you. NRV. Then another thing is you all need to learn how to value inventory. So what price do you present it in your FS? Lower of cost or NRV? So this is something that they will ask, very classic question. Okay. So again, journal entries. You buy goods, DR inventory, more inventory, and then you pay by cash, credit bank. If it's credit, then payable. Okay. Then sell goods again. How many journal? 2. Okay, so which is what we have gone through earlier just now before the break. Okay, so this one is for the costing. This is for the selling price. So always will have 2 journal entry when you sell. Okay, then for here, this is basically the new addition to the chapter lah. The rest is pretty like the basic accounting stuff. Okay, so for NRV, we always have to adjust our inventory lower. We must always put it at the lower amount. So for inventory, let's say my NRV, okay, so let's say my inventory right now is 10,000, but my NRV now is 8,000. I will have to adjust it downwards to 8,000. I must always record at a lower price. So for here, I will pass this journal entry, impairment loss and inventory. Okay, so any idea what is the impairment loss, the element? This is an expense. So it will appear in which FS? Performance. Okay, so this one will appear at performance. So your impairment loss. Then end of the day, your credit inventory, because you want to drop your inventory value down. Make sense? Okay, so any questions? No question. Wow, okay, then we very fast because everybody no question today. Okay, then again, accounting theory, prudence. You need to know prudence theory. We always have to record at lower cost or NRV. So this one you really just got to remember and swallow it. So I'm gonna pause here. Your take down notes. Okay. Move on. Okay, so I have a work example we'll go through quickly. Okay, so later we'll also do a question like that. So when you see anything that says FIFO, right, the first thing you need to do is to label the batch. Okay, so for labeling a batch, you read the question, you have to catch the first day. So where's the first day here? April 1st, right? So immediately that is batch 1. Then subsequently, here they say purchase. So you will label the goods 2, 3, 4, 5 like that. Okay, then when you sell, you see here sell, we will match. So first in, first out. You have to take from 1 and then 2 and then 3. So here they sell 75. Which batch do I take? Okay, so first and second. Then what about the second sale? Third and fourth. Yeah. So the leftover is what? 5. Okay, thank you for your input. Okay, so again, this one is also very logic one. Total you got 5 batch, right? They sell 4. So the leftover is the 5th one. So end of the day, your balance brought down, it must be the batch 5. Okay, your balance brought down must be 970. So this is how you check your answer. So if you do right, and then you realize your ending balance is not the last batch, right, then confirm is wrong. So these are some things that you can take note of. Okay, so with that, right, here, this is how it will look like. So you can see my 970, that's my ending balance when I do my inventory account. Okay, then when I sell, this one will be my batch 1, batch 2. This one is my batch 3, batch 4. So do I take the number over here? This number do I take? This 3570. Do I use this number? Okay, then why not? Why not? Why don't I put this for here? Yes, excellent. Okay, you got it. So for here, this is inventory cost of sale. Remember our double entry? This is for the costing. Okay, so for here, this one will be for which one? What's the double entry? This one? Yes, and receivable. Okay, can you all hear me now? How about now? Okay. Okay, so where was I? Yeah. So for here, this one also classic question. You all need to know how to adjust. Wait. Here we are. Okay, you all can hear me, right? Okay, so for this one, I will have to adjust my inventory downwards. So just now we know, right, the inventory is at 970. Then now they tell you NRV is 900. So to adjust, I need to drop by 70. My inventory have to decrease by 70. Okay, so the 70 will be an impairment loss, which is an expense. Okay, so next part, we will go through a bit. So I want some interaction from you all. Okay, so what's the impact of not adjusting? So basically, the impact of not doing this journal entry. So I never do this one. What will be the impact on the profit and the CA? So for not adjusted, what answers can you put? Yes, excellent. Okay, so overstated, understated. Okay, for not adjusted, unadjusted, not ad. So you'll be overstate, understate. Okay, so if I never do, means I didn't pass this journal entry over here. Okay, so if I never do this, how will it impact? I will write down the profit formula. So if I never do this, means I never debit impairment, right? So impairment, I know is an expense. It will impact my profit. So for profit to have any sort of movement, my income have to change or my expense have to change. Okay, if both income and expense have no movement, right, your profit will be no effect, right? Okay, so for here, I know it's an expense, so it's going to impact. So if I never do this, my expense will become higher or lower. Okay, you're shy to talk, then point your finger like up, down, like that. Then got people say lower. What do you think? Okay, thank you for the enthusiasm. It will be lower. Never do. Means you never debit this expense. You debit expense is more, right? So never do means lesser expense. Okay, so lesser expense, then your profit will become up. So it will be overstated. Okay, then same for asset. So the whole point of you doing this is to decrease your inventory, right? So if you never do this, your inventory will become even higher, overstated. So can we all get this? Yeah. Okay, then on the contrary, if I ask you after adjust, how can you answer the question? What answers can you put basically? What? Huh? Why no effect? You before adjust got effect, then after adjust, confirm will also have what? No. Okay, so for this one, right, unadjusted. So this will apply for all chapters, not just this one, okay? For all chapters, they ask you for impact, right? Whatever they ask, right, not adjusted, your answer must be over, under, state. But after adjust, your answer must be increase, decrease. Okay, so this apply for all chapters. So if like, this one also very common mistake people make all the time. So if people here ask you, right, unadjusted, right, then you go and put that decrease, confirm wrong already, the whole thing wrong already. Okay, so you need to use the right words. Okay, so anyway, this one is after adjust, so your answer got to be increase or decrease. So same idea, so after I do this. So again, this one is expense, right? It will touch my profit. So after I do this, the expense is down. Why down? This after the up. So after I do this, more expense, profit. After. Brain freeze. Okay, slowly think. So the word is what? Cannot say overstate this after. Yes, decrease. Okay, so profit decrease. Okay, same thing, my asset will decrease. So again, the whole point of you doing this is what? Decrease your inventory, right? Okay, so I'm gonna pause this here for you all to like digest. Okay, so I want to emphasize one more time for any chapter. Okay, so this is for apply to all. So if they ask you for profit, right, you write down the formula. So the only way for your profit to have any kind of effect, right, is your income or your expense change, because these two make up the profit, right? So if these two change, right, your profit will have some sort of fluctuation, right? Then if you look at the journal, right, got no income expense, right, you know this one immediately you can just whack no effect. Okay? And questions? No? Okay. So no questions, then let's get our hands busy. Okay, so can you all take out this one? Hey, why you all so sian today? It's a week. Okay, I understand a weekend morning lah. Okay, can we have energize a weekend? Okay, so I give you all about like maybe 3 minutes to go and vet through the question. Okay, so again, just a quick show of hands who actually managed to try out the papers. Who like actually try it before coming. Okay, well done, thank you. Anybody else? Okay. Your friend? You all try it? You try it a little bit. Okay, so you all got the try one. Who tried a little bit? Okay, a little bit. A little bit. Okay, great. So I'm gonna pause like maybe 3 minutes. Okay, thank you, Leisha, for your hand. Okay, 3 minutes. I want you all to go and get through the question, go and read through first, so at least you know what's going on. Okay, so I know some of you just got the paper today. Yeah, so go and 3 minutes, go and read through the question, and then we'll go through it. Okay, so do you have a quick look at the paper? Have like a sense of what's in there? Yeah. Okay, so before we start, I want to say that for me, my lessons normally I do it very seminar style. Do you know what's a seminar? Okay, so seminar means like a lot of people sit together and then they talk lah. So that's a seminar. Okay, layman terms a meeting lah. Okay, so everybody talk. So I don't like to have like lecture style. So like I'm just here talking and then y'all below just listening. A bit boring, I understand. Okay, so let's do this like seminar style. So what I expect is y'all kind of throw in some answers. Okay, so I won't be providing like an answer and then y'all just copy. So I want y'all to speak up, throw in your answers. Okay, just shout out the answers and then we just discuss and do it together. Sounds good? Okay, can we like yeah, we just get active a little bit. Okay? Yeah, so if it's wrong, it's okay, no judgment. Okay, nobody is gonna judge you for it. If they judge you, you tell me, I will scold them. Okay, so we're all here to learn. It's better than you make mistake here than you make mistake in your O levels, right? Okay, so with that, let's start. Okay, okay, hear me, right? Yeah. Okay, so let's start. Transactions are recorded based on source doc. So this is what we were going through earlier. Okay, objectivity. So is this followed? Then here, some 12 months, 12, 15 months. Okay. Followed. Violate. Okay, then here, this is what we were just talking about a minute ago, lower of cost or NRV. Start with a P. Excellent. So, follow. Okay, it does not record at original price. Okay, violate very fast. So this one violate historical. Okay, so any question with this? No? Okay, so this is pretty straightforward. So should be quite easy. Okay, let's move on. So this is source doc, which is what I went through earlier. We have the shortcut, right? So look at the keywords. Look at keywords. Okay, so here charging more to customer. So why you want to charge more in the first place? Because you so undercharge. So nice try, but debit note, yeah. Okay, then here again, keywords is purchase on credit, invoice. Okay, then here keyword returning, credit note. Okay, then here again, keyword issue check. Issue check. No. Issue check means what? Payment voucher. So here issue is you. Okay, so pay money, payment voucher. It's a bit lagging, I don't know why. Okay, so let's pause here for a little bit for you to take down answer, ask question. All the theories. So the one in the all of it. So 4, 6, 8, 10, 12. You need to know 12. Okay, let's move on. Then part C, going concern. Can someone just shout out the explanation? So assumes yeah, so you all can actually just copy paste from the revision kit, the theories table there. Literally just copy paste. Okay, so someone shout out the answer, please. Huh? Okay, so assumes that business operates indefinitely. Actually, it should be, it assumes that business, yeah, assumes that business have an indefinite economic life. Unless yeah. Okay, I write a bit of short form. So okay, thank you for the input. Yeah, I'll write a bit of short form so to be efficient. Move on. Move on. Okay, so here, this is the FIFO question that we were touching on a little bit just now. Okay, someone have a question. Okay, so they asked me what's the difference between, you all can see, what's the difference between payment voucher and remitted advice. So you pay money, payment voucher. Okay, just that simple. You issue money, pay for whatever, payment voucher. But remitted advice is you want to inform people that you pay money. So it means you have already owe people money and you want to pay them remitted advice. So if it's in that situation, you can use both. But if it's something simple, right, like they just say they pay money for expense, right, or they pay money to buy goods, then that one you can just use payment voucher. But if they say it's to pay for a credit supplier, then you use remitted advice. So normally what I tell my student is, if you don't know how to use remitted advice, then don't write it, just payment voucher. Okay, I hope that helps. All right, then let's move on with our FIFO question. So FIFO, what should we do? Just now we talked about this. We should label, right? 1, 2, 3, 4, 5. Okay, so here you need to catch this. This one is the first day. They say they have 45 units. So that one immediately I know is the first batch already. Okay, so you all have to put there 1. Okay, then here they say subsequently they purchase all this. So how? Well, I very scared to look up like hurt my feelings. Every time I look up, everybody's eyes. How? Then after 1 is what? 2. Yes, thank you. Okay, this is like kindergarten counting class, right? Okay, so total I got 4, and then they say on this day they sell 65. So let's match which batches make up 65. Okay, excellent. So it will be 1 and 2. So we can put there 1 and 2. So 1 and 2 is gone. You can cancel it out. So my leftover is what? 3 and 4. So this 3 and 4 will become my ending balance. Okay, basically my balance brought down at the month end. Do we all have this? Okay, so now that we have this, we can kind of answer the question more easily. So part 1, I actually throw in a theory. So what's FIFO? Anyone? Okay, goods that are bought first are assumed to be sold first. So whatever you buy first, you must sell first. Okay, then part B, journal entry to record 21st August. So 21st August, basically we sell goods. So again, the same question, how many journal? Sell 2. Okay, so can anyone just like shout out the journal entry for that 2? Chop chop. So sell goods, debit. Okay, trade receivable. To slay trading. Hey guys, I'm also a Gen Z. I'm not that old. Please. Okay, then credit. Sales revenue. Okay, so this is accounting for the selling, right? So what about the other side? For the costing, I will debit. Okay, cost of sale. And inventory. So normally those weaker students who are not so familiar, my advice is to, bracket it. So like bracket the element and point the arrow. So like example like that. Okay, so it will help you better. So do this kind of thing if you are a bit not so confident yet. So like that. Okay, so what's the amount? I forgot about the amount. Okay, so for TR and sales, it will be how much? Okay. Do you know where this number come from? Yeah. So they sell for this amount. This is the sales revenue. Okay, cost. What about the cost? How much? How to get the cost? So here we label, right, 1 and 2. So it will be this plus this. Okay, my batch 1 and my batch 2. That's my cost. Okay, so can someone quick math and tell me the number? Thank you. 1 0. What? 1 0 4. Is it correct? Okay, so you all double check whether the numbers are correct. How come I don't see you all pressing calculator? Very strange. I don't see you all pressing calculator. You all just like here to copy the answer, is it? Okay. Next one, calculate the gross profit. So first of all, to even calculate this, you need to know the formula, right? So what's the formula for gross profit? Okay, so you have your net sales minus the cost of sales. So that will give you your gross profit. Okay, so what is my net sales? My selling price. Okay, then again, cost of sale, the batch 1, batch 2, the 10,004. So my gross profit is how much? Oops. Okay, thank you for pointing that out. Okay, so you realize that these numbers, isn't it just taken from here? This one is from here. Okay, so your selling minus your cost. that give you your GP. And so all these numbers, they are all the same one. They all, it makes sense one. It's all tied together. Okay, can we move on? Okay, let's move on. Part D, calculate the inventory value as at 31st August. So basically, what is this asking you? 31st August. So long story short, it's asking you what is the ending balance. Okay, so how much do we have at the end? So we already labeled nicely, right? So at the end, isn't it just 3 and 4? Okay, so it'll be 5890 plus 4006. Okay, so someone quick math and let me know the answer, please. Eight. 1 0. 1049. Okay. Plus everything and minus the. Then what's the purpose of that though? Yeah, but here I'm asking you how much our inventory is worth at the year end, at the month end. So at the whole year, okay, the whole month we have this 4, correct? But we already sold 1 and 2. So this 1 and 2 doesn't exist anymore. So whatever left over is just these 3 and 4. That's what I'm asking. So at the month end, you worth how much? How much left over? I hope that clarifies. Okay, so to make it more obvious, this is basically your 3 and your 4. Then this one here, this cost of sale, this is your 1 and your 2. Okay, let's move on. And then here they say that after they do some inventory valuation, they realize that 4006 have a NRV of 4000. So let's do some journal entry to adjust. Okay. So impairment loss. So this one is an expense. And then credit. So credit inventory decrease. Okay, so what's the figure here? 600. Okay, so why? Because now it's 4006. I want to make it to 4000. I must decrease it by 600. Is my handwriting still okay? Can read, right? Okay, then F, how should we value inventory in our FS? I dropped hint already. Okay, prudent. So prudent state lower. Okay, or net realizable value. Okay, so this one is actually quite important. You all need to remember. This one is a classic question that they will ask. Okay, then here are some true or false. Can I give you all 30 seconds to go and figure this out, and then you all tell me true or false? Okay, so end of the day, right? They did not adjust. They still put 4,006. Okay, they did not adjust the inventory. So those who haven't learned the chapter yet, just give it a try. Wrong, never mind. It's okay to make mistake. Okay, you're done selecting your answers. Okay, let's go through together. First one, CA is understated. So CA here, I'm basically referring to my inventory lah. Is it understated? So it should be overstated. Okay, because I still put it at 4,006. Then second one here, other expense. Basically, I'm talking about the impairment loss. So I never adjust. I never create any impairment loss. My expense understated. Okay, yes. Because there's no impairment. Then last one, they say they violated the prudence theory. Yeah. Okay, so they still record it higher. Okay. Any questions to clarify with this page? Nope. And then let's move on. So this is where the fun chapter is at. Okay, this is the chapter 6-7. Okay, so before we move on to this, I want to do some recap. What is the 4 steps? Okay, so there's 4 steps, right? What's the 4? Okay, reverse. Okay. So this one basically is cash at bank. Okay, adjustment. Okay, income summary. Okay, so quick recap. So this reverse will always be on the first day. Right, then this 3, 4 will always be on the last day. So please know these 4 steps. So if these 4 steps you don't even know, right, then very hard to do already. Okay, you all done taking this down? Done. Okay, you all have to give me some response. I cannot see what you all write in your paper. All done, right? Okay, so for here, let's label the steps first before we get things started. Okay, so down here, I see this 1st August, so I know immediately this first day already, right? So this one, I will just straight away put step 1 already. So this one, you see anything first day, right? Immediately is confirmed step 1. Okay, so this 2,000 payable, that's step 1. Okay, then what is step 2? No. So step 2 is called payment, right? Payment. So payment, I use what to do payment? I use check, I use bank, I use pay now, PayLah, Bitcoin, right? So they got say anything about that? About giving check and all that? No, right? So means don't have lah. Okay, so means step 2 don't exist here. Okay, then let's move on with 3. So 3 is called adjust, right? So adjust, again, is always on last day, right? So last day, can you see here, September 31st, September 31st. So I have a last day here, and they say it's a prepayment. So this indicate that it is a step 3. Right, and then additional info, they say monthly, they have this amount. So if I got monthly, can I find the whole year? So just times 12, right? Yeah. So for any accounting paper you all do, right, you see anything that says per month, you just times 12. Okay, unless you are taking this in another universe. Okay, so for us on Earth, is a year is 12 months lah. Okay, so that's times 12. So with that, this one times 12 means it's for which step? 4. Okay, so this one basically, this is step 4. Okay, the whole year, how much expense we use. So I got 1, 3, and 4. 2 is missing, right? So you need to calculate yourself. Okay, so whatever is missing, you need to calculate yourself. All right, so let's start with A. What's the whole year incurred? I pretty much already give out the answer, right? So just the 12 months of whatever you use, so which is okay, so for here, incurred for the whole year. How much you use. So whether you pay or don't pay, does it matter? It doesn't matter. Okay, so whole year I use how much, that's how much I incur. So whether I pay today, tomorrow, doesn't matter. All right, then here, let's have some fun, the journal entry. So you all have to follow me on this. So for journal entry, we will follow the date. We're starting from the first day. So first day will be the August 1st. We will just follow the question. Okay, so step 1 is called reverse, right? Remember? Reverse. So with that, right, let's look at our step 1 where we have this and this. Okay, so my step 1, let's do the original journal. So what is the original journal for that? Because step 1, we got to reverse. So payable, this one is a or L? Payable, A or L? L. So L is a debit or credit in nature. So this one will sit at credit, right? We're doing the original one. Okay, so again, this payable is a liability, right? So liability, it should be sitting at which side? Debit, credit. Liability there. Credit, right? It's a credit in nature. It's a L. This is a L. Okay, so I should be crediting salary, expense, payable. Then my debit will be the salary expense. So this is the original journal. The original. So if you are not familiar yet, right, my advice is write down the original one first, then below your answer, you go and reverse it. Okay, so step 1, I need to reverse, so we'll just flip this around. Okay, so you'll write down this first if you are not that familiar. Done? Okay, so step 1, we reverse it, it will become what? Debit. Okay, never mind. So debit, salary, expense, payable, and then credit, salary, expense. Then subsequently here, everything will just become year end already. So 2022 September. So take note, it will become 2022 September already. Because 12 months later. Okay, so what is step 2? Come, let's revise. 2 is what? Payment. Okay, so this one is again your accounting 101. I pay money for expense. The journal entry is debit. Okay, debit expense and then credit bank lah. So like I mentioned, 2 is not given, so you need to go and calculate on your own. So this one we leave blank first. We are gonna come back to this after. Okay, so we leave blank for now. Okay, we'll work backwards later. Then what is after 2? Which is, okay, adjustment. So again, adjustment is at the year end. So for adjustment here, they given you already, right, the number 3. So number 3, they have a prepaid. So what's a prepaid expense? CA. So for step 3, we will just pass the original normal journal, nothing to reverse. Okay, so for here, I know prepayment is asset, so that should sit at okay, DR. Okay, so I will DR prepaid expense and then credit the expense. That's for step 3. Okay, then now let's move on to the last step. What's that called? Income summary. So again, last day. So income summary, I want to make the expense to 0. Am I right? So expense, I should put at the minus side. So where should I put it? Okay, credit. So credit salary expense. Then your opposite will just be the income summary. Okay, so here you want to make expense 0. Bless you. Okay, so for here, whole year, how much expense did we use? So which is the part A answer, the 14400. Okay. Okay, so as of this point, you should have something like that. Then are we done? Can move on? Not yet. Okay, so we still got to find what is the missing 2. Okay, so for the 2, to find that, we will use this very, very simple formula. Okay, 1, 2, 3 equals to 4. Your teacher also teach you all this? No? Okay. So for here, my eyes, I will only be concentrating on salary expense. So I'm going to be looking at only the salary expense. Okay, so you can highlight it like me if you want. So for expense, really learn, right, the very basic one. It's a debit or credit in nature. Expense. Hey, why all don't dare look at me? Huh? It's a debit or credit in nature. DR, right? So debit means it's positive. Credit means negative. Okay, so let's go through one by one. Step 1, is it positive or negative? Okay, so negative because sitting at credit, man. Okay, so I will start with a negative 2000. Then step 2 is basically the unknown. Then step 3, positive, negative, negative also. So minus. And then that gives me a 14400. So from here to find your number 2, just set one map, right? This one come to here, this one come to here, right? So can find 2? Okay, so can you all go and get your hands busy and let me know what 2 is? Already calculated. So fast. Okay, we let the rest do first for those who have yet to try. So those online, y'all can, y'all can type in the chat box. Oh. Yeah, so y'all can type in the chat box. Any figures? You all got any figures? Okay, one more time. 4, 4, 7, Are you sure? I don't think that's correct. I shouldn't start with a 4. Yes, 17150. Okay, so your answer is this one. So just show of hands again. Who managed to get that? Okay, great. You're not. Okay. So before we move on, let's recap again. Okay, the 4 steps. So here is my step 1, right? What's that called? Okay, so reverse. So we flip things around. And then here we have a 2, which is payment, which is we use cash at bank to do that. Okay, then here the 3, we have the prepaid expense. We are adjusting. Okay, then my step 4, I will close, right? I'll make it to 0. I close to income summary, the whole thing becomes 0. So the expense put at the minus side. Then so there you go, the 4 steps. So quick revision. What if this is an income account? Then how? Then how to do this one here? Debit. Okay, debit income, then credit income summary. So you realize they are a mirror image of each other. Because income minus you debit it. Okay? Okay, so any concerns or queries with here? No? Okay, so managed to take down everything. Okay, so I won't be sharing the answers publicly. So whatever we go through here, you all got to take it down quickly, okay? So I won't be sharing the answers. Okay, let's move on. So for here, prepare the extract. So quick, again, you know, I efficient, so I like quick tips. So performance, right, you will be taking from 4. Position, you will be taking from 3. Quick recap one more time. So performance, what items will we have over here? Okay, so we have income and expenses. Then what about here? Asset. Okay, so A equals L plus E basically. Okay, so all these elements, all these basic stuff, you all should be familiar. So performance, let's do that together. The title, basically you just copy lor. Okay, so you just copy statement of financial performance. Yeah, I write a bit short form, don't mind me. So here I will be taking step 4. So what should I be presenting here? Which income, which expense? Okay, so it will be under what section? Okay. So my step 4, what answer, what figure did I have? Okay, the 14,000 lah. Okay, so this from the step 4. Step 4. Okay, then let's move on. Position statement, same thing. We just copy down the heading. So take note that performance will be for the year ended, but for position statement will be as at. Okay, so take note of that. So for step 3, what do we have? Current asset, which is the prepayment lah. Okay, so that one will see under current asset, the prepayment. So that will be how much? 750. So again, this one is taken from the step 3. Okay, let me know when you guys are done. Okay, then let's move with F. So effect on profit. So over here, I'm asking you for not adjusted. Recap again, what answers can you put there? Okay, over, understate, no effect. Right? Okay, so for here, what is the impact on profit and CA if the salary expense is not adjusted? Okay, so just a recap, what will be the journal entry? Prepaid. So prepaid salary expense and then salary expense. Okay, so basically they're asking you if you never do this journal entry. Okay, so if you never do step 3, because they say what's the impact of not adjusting, means never do step 3 lor. Because step 3 is called adjustment. Make sense? Okay, so never adjust, never do step 3, which is basically this. So if I never do this, how will it impact the profit? So again, profit, income minus expense. So never do this, never credit expense. Expense is never do. Never do this. Means this credit expense, you did not credit it. Okay. Can we have more hands up? Okay, so few people pointing up. So is it up or down? Okay, so it'll be up. So profit down. So answer what? Okay, understated. By 70. Yes, the step 3. Put this here. Okay, what about the current asset? So current asset is referring to prepaid lah. So if I never do this, this entire prepayment won't even exist, right? So the current asset will be y over. You never don't exist at all. Understate. Okay, so this one basically is understate. Both will be understated by 750. So take note to put the amount. So some students, they will just put there understate and then full stop. Then very wasted already like that. The answer already there, but then cannot get marks. So don't do this kind of thing. Okay, so write the amount. So any question with this? Then before we move on, right, come, let's reflect another question. Okay, so what if here I say after adjust? What's the answer? So same thing, but after adjustment. Profit is increase, then CA is increase lah. Okay, so remember after increase, decrease. So before you adjust is understate. So after you adjust, it must be go up, opposite lor. Okay, so before it's understated, after you adjust it, you will increase it. Okay? Okay, let's move on then. So this is a bank rec, which I mentioned we will apply it to learn better. So the first step when you do this, right? Okay, your step 1, what should you do? What should you check? Okay, you should check your opening balance, your beginning balance. So this is the first step to start with. So a lot of people will forget about this and then everything will go wrong. So your first step, I think someone asked me to go back to the previous page. Can you go back to the previous page? Okay, done, right? Done? Okay. So for here, the first step we should look at is the beginning balance, and we should try to correct it, match it to the same. So to correct this, we realize that it's not the same, right? We will find the difference and cancel it. So the difference is 600. So we will find the 600 and cancel it. So you make the beginning balance same. Okay, then another thing that I will highly suggest is you put down the signs. I think you all should know, right? They're opposite. Okay, plus, minus, and then minus, plus. Okay, then another thing you should look at will be your error. So your error is the one down here. They say that incorrectly recorded in cash at bank in 2nd July. So for me, I will do this. Easier for me to track my answer. So I know 2nd July in cash at bank is wrong. I have a 1005 check number. So the 1005, I will cross-reference back to my bank statement, which is this. Okay, so the error is at the plus or at the minus side. Huh? The error is at the minus side, right? So they already say that this one is wrong. So this one must be the correct one, right? So for here, the next question you ask yourself is, did they minus too much or too little? Okay, too much or too little? Too much. You all agree, right? So again, logic. So you all think. So minus too much. What's the logical way to correct it? Should I minus more or should I plus more? Plus more. Okay, so minus too much. To correct, I need to plus back. So I'm gonna plus back another. How much? 600, yes. So here plus means I will debit 600 later. Okay, so to fix this, we need to plus 600. Can all get it, right? Yeah. Okay, so this 300 is already correct, so you don't need to bother anymore. It's already correct, so don't need to further go and touch it already. Then from here, you all know how to do the mix and match? Know how to do, right? Okay, so you all match. Like this, go with this. And this, go with this. So whatever that doesn't have a match, you all got to record it. Okay, let me know when you all are done doing that. Done? Okay, so for here, this kind of question, classic one, update the cash at bank ledger, prepare bank rec statement. So when you are doing cash at bank account, you will look at the bank statement. Okay, then when you are doing the bank rec statement, you will look at the cash at bank account. So you always do the opposite. You want to record whatever that isn't recorded. Okay, so people ask me why. Okay, the logic very simple, right? Here is cash at bank. So you want to record whatever that didn't appear in the cash at bank one. So all these already crossed, you already recorded. So why you want to record it again? So all these are already sitting inside the cash at bank already. Then you record again, then isn't it like doing more work? Then don't make sense, right? So you want to record whatever that is not inside the cash at bank. So you will look at your bank statement when you do that. Can? Okay, so first thing, let's fix the error first, where we need to plus this 600 that they minus too much. Okay, so another thing to note is that for bank rec, you will always be at the month end. So everything will be July 31st one. So always will be month end. So if you're going to put there first and then you're going to follow like 10, 12, 17, that's wrong. Okay. So always is at the month end. Okay, then so the balance brought down, I will be taking from the amount here. So any idea why I'm taking this and not this? Okay, so also again logic, right? The cash at bank, they stop here. You continue from here. Okay, you don't take from here. So this one, they started this at the beginning and then they add all these things, minus all these things. Then why you take from here? Here, nah? Okay, so they stop here, you will continue at where they stop at. It's just that simple. Okay, so we will take from that. So 7631 BR. So if they put credit, you also just follow credit. So what does a credit cash at bank mean? Bank overdraft. Okay. So for here, let's fix the error. The error is who's the error from or to? This is the error, we highlight pink color. Okay, so it's a trade. So here minus, I pay him money. Trade payable. Okay, so this will be trade payable. So I should plus back, right? So I will debit 600. I need to plus it back to fix the error. Then subsequently, whatever that I didn't tick in my bank statement, I will need to put it in here. Okay. So for this one, are you comfortable to handle it on your own? Can. So let's do a time practice for this. Okay, so let's do a time practice. I'll give you guys maybe 10 minutes to do up the cash at bank and the bank rec statement. Then I will check the answers together. So do up both the cash at bank ledger and the bank rec statement. You don't need help with the bank rec statement formats. Are you familiar with the formats? Okay, so the beginning is the balance as per bank statement. That's the first line. Then add deposit in transit less unpresented checks. Yeah. So for those who have already attempted this at home, you all can maybe try a little bit of the FS. Try to do some adjustment first. Okay, you all seem like you all are done. Are you guys done or you all need to use up the entire time? Okay, neat. Then let's wait for the timer to expire. So those who are already finished, right, go have a look at the FS. Try to do some adjustments if you can. All right, all done. Okay, let's run through the answers. Okay, so the answers we have are here. Okay, so end of the day, your ending balance, they must tie one. So your ending balance over here, the 9546 have to tie with 9546. Okay, so just a show of hands, everybody here tie the numbers. Okay, what about the friends in front? Got, okay, beautiful. So for cashback bank, again, I want to emphasize, you will be taking transactions from the bank statement. So all these that got no tick one, right, you will put over there. So plus, you follow plus. It's at the deposit side, you put at the plus. It's at the withdrawal side, you put at the minus. So you follow the signs. Okay, then ultimately you calculate until 9546, and then balance brought down. So you notice that my dates here are all July 31st. Always is at the month end. We will do all this reconciliation. Okay, so if your dates are not 31st July for all, please amend it. Okay, so I'll pause here, and then oh, one more thing. So this bank charge over here, this is an expense. So with that said, will this $45 bank charge, will it impact my profit? This is an expense, right? So will it impact profit? Yes, okay, because profit is income expense. Okay, so to take note of that. Then let's move a little bit down to the bank rec statement. So bank rec statement, you need to know the formats. Okay, so the logic is the same. My bank statement, I ended with 6156, right? Where's the, I ended with 6156. Here. So I will start with 6156. So that's why my start is here, 6156. So same thing, those in the bank, right? At the debit side, you will be under the add section. All those at the credit side, you will be at the less section. So you follow the signs, add with the plus, less with the minus. Then end of the day, your adjusted balance will be the same. You reconcile these two together. So is there any questions that I can take from here? Anything to ask? Okay, you're all done with copying. So for this kind of bank rec, right, they can ask more. So they can ask you to do adjusted balance. They can ask you what to present and all that. So again, because of time constraint, it's impossible for us to go through everything. Okay, so this one will be what we will drill down during the regular lesson. Okay, so this is not all that they will test. Okay, so just a disclaimer. So this is just like a quick revision course. All right. So let's move on with the part C. So 2 reasons why checks are dishonored. Okay, check has expired. Check is post dated. Okay, check info is incomplete. Any of those. Okay, so here they also can ask what is purpose of internal control, state internal control, what's the purpose of bank rec, all these you're going to be familiar. Okay, so what are the purposes and all this you need to know. Okay, so any question with this? If not, we will move on to the FS. Done? Okay, so for FS, this one is a question that confirm will come out one. So this one will be 20 marks. So this one will be worth 20 marks. Confirm will come out one in your paper 2. So for me, if you ask me what is the standard benchmark, I would say this will be completed within 45 minutes. So that will be inclusive of your adjustments plus you copying down all the answers. So within 45 minutes, this should be done. That's the standard you should take. Because in paper 2, you all also have other questions. You all don't just like do this alone, ma. Okay. Then again, if it doesn't balance, then just move on with life. Okay. Don't need to try to balance it. So even if it doesn't balance, doesn't mean you don't earn marks. You still earn some marks from the adjustment. Okay. So to assure you all, right, for me in my O levels, that when I took it, right, my O levels, my FS didn't balance. Okay, but then my grade was a distinction lah. Okay, so when it doesn't balance, it's okay. Well, just move on with life. Okay, so seminars now one more time. When we start to do a FS, we got to label all these elements here. Okay, so we will just label like CA, SCL, that kind of thing, or E or I, that kind. Okay, so quick seminars now. Can you all just shout out the elements and then we chop finish this? Okay, excellent. Income, all these straightforward. Sales revenue is income. This one is contra income. Cost of sale, expense. So this cash at bank, your eyes got to be sharp. You see, it's at the credit side. Cash at bank credit side. So it's a bank overdraft. Okay, so it's a liability. It's not an asset. Take note. Bank overdraft. Payable. Not an CL. Then same thing, this discount also never stay, right? They just put here discount and then credit. Means it's an income or expense. Credit is an income. So this will be a discount. Receive. Bank loan. Okay, these two will be under the equity portion. Okay, so we should have this. So label it when you are copying over, right? You can do section by section, it's easier. So you just look at your labeling and then you put over. Okay, so for here, let's do the adjustments together. So if you know, just shout out the answer. Okay, rent they pay for 15 months. So this one, again, we all staying in Earth, right? 1 year got 12 months. Correct. So this one will be pay too much or pay not enough. Too much, right? Because 1 year, 12 months. So they pay extra 3 months. Right? Okay, so what will be the rent that you call they pay extra? Okay, so prepaid rent expense. So you will create prepaid rent expense. So how to do the calculation? So 3 over 15 times the rent, which is 330. Yeah, so you all like quick math and then like tell me the number. Yeah, so those like online one, you also can type in the chat box. Okay, so this one is pay too much. So pay too much, you minus. Pay not enough, you plus in. So pay too much, I will minus out. So go to your rent and then we will deduct away. So you'll create prepaid and then you minus from the rent expense. So your FS, this question paper is supposed to look very dirty one. Supposed to have notes here and there. It's not supposed to be clean. Okay. Number 2, salary was outstanding. So outstanding means never pay. So what do you call salary expense never pay? Payable. So we will create a salary expense payable. And what's this? So again, this one pay not enough, right? So we plus inside. So salary, you plus. Okay, so if like y'all cannot catch up or anything, right? If y'all want the adjusted version of the paper, y'all can come forward to me after class. I can share with y'all. Okay, so if y'all need it, y'all just come forward and let me know. We will share. I'll share with y'all. Okay, then number 3, commission meant for July. So over here we are June year end. So again, too much or too little. So income, I pay too much. I pay too early. Income received in advance. So again, you will create lor. And what is this? Yeah. So this one pay too much, right? We will minus. So go to your commission income and then we will minus 900. Okay, then number 4, they say expense paid in advance. Okay, so you create prepaid. Then this one is it's not an expense, prepaid. Prepaid expense. Yes. So again, too much, take out. Not enough, add back. So this one is pay too much or too little. Pay too much, right? Pay early. So you minus. Okay, then number 5, owner pay for gym membership using business bank account. So her own gym membership, nothing to do with business, right? So it should be thrown under the drawing. So drawings, add in 200. And then my cash at bank, I will deduct the 200. So take note, this is already a negative. So it will be a negative minus a negative. So become a negative 2008. Okay, so it will be a negative 2008 bank overdraft. You all get it, right? Negative and negative become a bigger negative. Okay, number 6. This one you know means you know already. Okay, so loan they pay for next year. So your loan is a NCL, means you take more than 12 months to pay. But this one is gonna pay next year already. So I will reclassify it under a CL. Yeah, current portion. Okay, I'll put here because there's no space. So current portion of long-term borrowings. So this one will be a CL. Then from your long-term borrowing, your loan, you will deduct it. So basically, you are reclassifying from here. You just take out and you put under a CL. That's about it. You reclassify it to a CL. Okay, last one, NRV is what we have went through today. NRV, it should be at 23,000. But right now, our inventory is at how much? Yeah, so we need to make it to 23. So how to make it to 23? Okay, so minus how much? 2004. Okay, so we minus 2004 to make it to 23. So what is the 2004 called? Okay, yeah, so we will create that. So impairment loss. 2004. And this one is a expense, which will appear under which FS? Performance statement. Okay, so this one it will be in the performance statement. Okay? Okay, and that we are done. So overall, your adjustments will look like that. Okay. I will give you guys 1 minute to read through this, digest a little bit, and then I'll show you all the answer for those who have tried. So you all can just take down the profit, just the A and the LE, the balancing part. Then you all go and try, see you all can get the profit or not. So if you all have anything to ask, please just sound out or type in the chat box. All right, is everyone done with this? Anything to clarify? Anything to ask? No? Okay, so your answer will look like that. Your profit will be this 18,540. Then your position will look like this, issue balance, your A and LE. So take note that your, just now that cash at bank, you notice in your CA, there's no cash at bank, right? So it will be a bank overdraft here at the CL. So you all want to take down, you all can just take down like this one. So it's you just go home and check if you balance to these two numbers. Okay, any questions? Then yay, we've made it to the end. Thank you all for your enthusiasm.